Welcome back, everybody. We're going to talk about the um, moving averages, and we're going to also mention a particular charting style with Thinkorswim. It's called Heiken Ashi. All right, Heiken Ashi charting. Okay, and this particular style, um, where it changes our candlesticks. Okay, it's going to change our candlesticks to where they're either going to be green or they're going to be red. All right, and so let's take a look at it. All right, we got to go. All right, so first off, we know we have our moving averages. Okay, so we have our 200 simple, our 200 moving exponential. I just recently added this 40 simple moving average here, and we have our 20 simple, and we also have our 9. Okay, and as we see our stock, um, this particular Chipotle chart, been respecting the 9, okay, on the way down, and as it starts to go back up, it's starting to respect the 9 going up. We know it respected the 20 as a resistance area on the way down. Okay, kept hitting this area, selling off, and then as it started to roll over or find its bottom, then we start to taper off and start to become more of a support. Overhead resistance, and we're still technically in a bearish market. Okay, but we see our moving averages that are acting as support here, visually helping us determine that we're still that we're in a bearish market, but we're trying to go positive. All right, we can take a look at Nvidia. Kind of the same thing, only Nvidia has crossed over and pushed higher into this bullish market because we've crossed over our 200 simple moving averages and our 200 moving exponential as we crossed over into this bullish area. We haven't got enough distance to come back and make sure this is a good support, but we do know that we're heading into bullish territory on Nvidia. Now our candles that we're using here are called Heiken Ashi. Alright, we can change that style. We can change it to regular candles. Alright, these are our regular candles that we're reading every day. Gap down. See this big old gap here where it gapped down. This big sell. But now Heiken Ashi is nice enough to fill all those gaps in for us. See, it just made it one big red bar. Alright. And so this is a different way of trading, and as far as I can tell, you're going to have to wait for each bar to close to know which way it's heading. But it's really a simple way of trading. Really, you just, when you see, red coming in, you buy red, and when red goes away, you buy green, or you sell short and buy, and then it starts to turn red again, sell short. Only problem with this is it's a bit of a laggard. It's going to be more for swing traders to because you got to wait for that bar to close to know what's actually going to happen for that day. Alright, you see how choppy meta looks, and this could be really confusing for some people. So if they want to use the Heiken Ashi for their swing trading, it just kind of cleans it up for you. It makes it a little more simple to see, a little more visually appealing, I would say. Alright, but it still manages to respect our moving averages. Alright, here you can see we're respected the 40. And then as it started to head back up again, it got the 9 and the 20 and respected those. And then on this side, when it sold off, it respected the 9 heading down. So, visually, this is a lot more appealing than the actual candlesticks. Heiken Ashi kind of makes it a little easier to see. You can just stay short you know, until, you know, it turns green and stays green. You know, even though you got a 3-bar pullback, that's kind of a normal type pullback here. 3 bars. You know, push down, found some support here at the 200, right? Took a little profit off right here. It popped up to here and found it. And you can see here where it hit twice here and then sold off again. So it got rejected in this area here twice, which was a rejection area all the way across. And this is when your price levels, if you can add those to your trading also, kind of help you visually, right? Because if you look, that was a rejection area always, and here is rejection area again. Now it's acting as a support area. So, you know, these are all visual aids, really, just to kind of help you with making your decision, making you decide what you want to do. And if you can always go, okay, well, what is the price doing? Well, you know, generally it does the same thing every time. It finds areas where there are either sellers or there's buyers. Okay, and currently, as this thing pushed higher, right, especially after this big sell, buyers came in and they're like, okay, let's push this thing back in. Maybe all this they took off here, they just put back in down here, and now it's pushing back up. But we know we're back to an area of interest by the way the market moved in the past when it hit this area. Okay, and it's kind of doing the same thing now. So will this hold as support and continue higher, or will this fail and come back down in here somewhere and find some support and get back into this little bit of a range that it ran around in? So these are all just visual aids that you can use to help you with your trading. If you're trading swing trading like I do, holding a particular stock for weeks at a time, then this Heiken Ashi really would help you, in my opinion, just based on it doesn't have all the confusion of the day-to-day bar trading, right? The day-to-day, all the gaps and the bouncing around and all the, you know, what the bar is doing on a day-to-day. You could just kind of sit back and wait for, or what the bar is doing intraday. During the day, you're not getting all this. See, like you had this big old sell-off. It was, you know, it sold off and it was red, one big red bar at one point, and then it closed back up here and went green again. But then when you go and change it to Heiken Ashi, right, it's just a big sell bar. Alright, so the confusion of whether it's a positive or a negative bar goes away, and you just see it as a negative bar, and then you know you're still going lower. Okay, so that's kind of the good thing of Heiken Ashi trading. Alright, so anyway, that's my little explainer on Heiken Ashi and on moving averages. You can use them all. You can use it for anything in your trading. You know, going short or going long, coupled with the moving averages to kind of help you decide which way you're going to go with that particular trade. You know, you got your, you know, this is Snap Inc. and, you know, this one's kind of choppy, bouncing around, but then you got your moving averages that are kind of helping you make a decision, even though you know you're still in the bear market. You got the 20 and the 9 and kind of helping you with those support areas as the trade turns around and starts to try to head back up. You know, Rocket Lab, same thing as it was selling, and as it found its bottom with these moving averages as support, and now it's turning around and head back up. The thing I don't see is the reason that I had gotten into this trade is, was up here somewhere. I don't see that anymore with the Heiken Ashi. If I change it back to candlestick, alright, I see the break, the big green bar that came in, found the bottom, and then the break of this move here where this red bar came in and then this green bar took it out. Once it took out this one, I was like, okay, we need to get into this trade here. Alright, and this will be our stop out down here somewhere. Alright, and so far this trade has proven to pull through with Rocket Lab. Still pushing higher. Okay, so that would have been a little bit different for me if I was using Heiken Ashi. Alright. So here it would have been red and it would have been green bar come in. And so, do you buy this or not? Well, maybe so. Maybe you buy it in here and see what happens. When you get a little bit of a red, you got some support. You got some for your 20s and stuff here. So, I might have been able to get a better price if I had been using Heiken Ashi. So it's just worth a testing period. Test it out, see how you like it, see how it works for you, and coupled with the moving averages and your normal support lines and resistance lines, it may be a good way to remain profitable for you. But you definitely want to keep trying different things until you got what you like and what works for you in your trading. Alright, so that's all I got for today. Like, subscribe, hit the notification bell. You guys aren't liking my videos. You gotta like my videos, man, so other people can see them. Alright, so how about hitting that like button, helping me out and helping others out? Because a lot of the stuff I'm putting out is really for your benefit, really to help you with your trading, and really to because I know that there's a lot of stuff that I missed when I first started trading. There's a lot of things that I was missing. I was following a lot of guys and I wasn't really kind of picking up on what they were saying. And so if this stuff is helping you with your trading, then I'd appreciate it if you liked it and push it forward. To help others with getting themselves into a point where they don't have to work a strenuous 9 to 5, and spend more time with other people than with their families. Because that 9 to 5, man, you're gone all day. You get up early in the morning, you get up and you head out the door, and you don't see your family until late in the evening. And if you have children, it'd be nice to be able to spend a little more time with them and not have to work as hard. But it's always going to be somebody that's got to do the work, so do the heavy lifting. So those people that aren't interested in learning how to do this, those are the ones that are going to continue to do the heavy lifting. The rest of us, as we figure out how to maintain our financial freedom, or how to maintain our finances, we'll have a little more freedom to spend with our families, and won't have to, work so hard. So anyway, that's all I got for now. Like, subscribe, hit the notification bell, and be careful out there. These markets are crazy.